So welcome to the Deal Finder Corner. So this is your weekly property talk show brought to you by Property Filter, hosted by myself, Guillaume Black, your favorite Frenchman, the CEO and co-founder at Property Filter. It's the UK's highest rated platform to find deals, and we're on a mission to empower our investor and deal sourcing member to find yet again 1,000 deals thanks to the Property Filter blueprint. And the purpose really with the Deal Finder Corner is to give you more and the best of the available resources by inviting expert guests who will share with you the latest and most current strategies, tactics, and secrets about what works right now in terms of finding and making deals and the reality really of systemizing and running a high-performance business in property. So it really is my pleasure to introduce you today to my very, very good friend, Mr. Josh Keegan. So Josh and I go back a few years now. We run a marathon together, so that was quite something. He's the father of two lovely Iris and Harvey. I got some really cool entrepreneur parenting advice as well from him, to be fair. You might not know this, but a couple of years ago now, we ran our marathon and crossed the finish line at the same time, which was really cool. Not holding hands, but just about, you know. So yeah, we went through some mock together, which was nice. And professionally, so Josh is the host of the Property Entrepreneur Board program, which is a top tier program, which on the Property Entrepreneur with Daniel Hill, is a chartered accountant and award-winning property entrepreneur, having started, scaled, and sold multiple successful property businesses. Josh walks the talk and effectively combines the disciplined world of finance, accounting with the fast-paced world of the reality of entrepreneurship. So he will be covering all things from basics bookkeeping to advanced financial automation and all the things really you need, you know, to make your property deals work and your property businesses to scale in a healthy way. So whether you're just starting or you're already, you know, managing and running a portfolio, this session will really help you get financial clarity from all things you want to do. So a few things we'll talk about. So different tools and frameworks you can use to ensure that not only your deals will stack, they'll generate significant returns from you, and how you can also dramatically increase profitability on your portfolio, the different mistakes we see people do, the mistake Josh has done, and also all the different professionals you need to help you run that. So without further ado, I'm very much looking forward for Josh, listening to Josh today. So please give Josh a massive Property Filter virtual welcome. Thank you, Josh. Welcome.
Thank you very, very much, Kim. Can I just check that can everyone hear me okay?
Yep.
Sound all good? Nice. Well, it's nice to see everybody here. Got a few friendly faces, people that I've met recently, some people that I've not seen for a few years. So it's actually really nice to see all the people on the call. I look forward to the session today. So I'll dive straight in. I think throughout, I'm really happy for people to ask questions, to raise their hand virtually, shout out, or use the chat box. But I'd like to keep this, engaged and make this like an enjoyable experience for everybody. So if everyone can really stay engaged, ask questions, etc., I would really encourage that. I'll share my slides and we will get going. So this is Know Your Numbers 2024, and we have pulled together like a Property Filter special. Guillaume's a man, being the world famous Frenchman, he gets any favour he wants. So we pulled together some content. It's unique. We've never actually done this content before. So this is the first time you guys are seeing it. So hopefully it lands well, and it's going to really help you guys on your journey. We've got agenda for the day. So I'm going to do very, very quickly about me. I promise you this is brief, just so you know who I am and why I feel like I can talk to you. A little bit about you. So the problems you're likely facing and what you're up to on your journey, where you're at currently. How to do deals that make you money forever. So this is a real key point, because we want to be in a place where you are doing deals that not only make you money now, but make you money for the next 1, 3, 5, 10, 15, 20 years, whatever that may look like for you. How to fundamentally increase the profitability of your portfolio. Then we're going to talk about 3 of the biggest mistakes that experienced investors make. Like, we're fortunate enough now to have seen behind the scenes of literally, I don't know, probably like at least 300 zero accounts, sets of accounts behind the scenes with businesses. And that gives you a real wealth of knowledge and experience about the things that allows certain investors to do really well and have like these high lucrative portfolios that make them money forever. And these investors that are struggling are in a really dark place, even though they've got these big portfolios. We of course we want you to avoid the latter. And then finally, some time for some Q&A. So I'm going to try and make myself available for as much Q&A as possible. There's a lot to get through. I'm going to try and do it at pace, but likewise, if you want to slow stuff down, fine. And let's just make the most of this session, the time that we've got together. And the aim of the game is value. Before we dive in, I'd really request that where possible, cameras are on. You know, I can see your faces, and you guys are. I love that Guillaume just shuts his camera back on. Good to see you back. Get yourself some water. Yeah, cameras are on, see faces as much as possible. Obviously, presenting on Zoom is always, I'm used to presenting in rooms with people where you can see their faces, you can get engagement. But presenting on Zoom is a bit more challenging. It can be quite like a soulless, lifeless experience. So I can see Carol smiling now. That's like, you know, making my life better. So everyone that's smiling, got your camera on, I'd appreciate it. Even if you've got some few things you need to in the background, I won't be offended. But just the more of you I can see, the better it's going to be. And get engaged. Like, I will be asking questions, I will ask for engagement, and there are some surprises up my sleeve for those of you that do engage and do really really kind of give me something back while I'm delivering this for you guys today. So, very brief introduction to me. So Guillaume did a very good job there. So my name is Josh Keegan. I'm a chartered accountant, so I'm CGMA qualified, which means Chartered Global Institute of Management Accountants, and that was my professional career before I became an entrepreneur and started investing in property. Won multiple awards within our industry over the years for starting, scaling successful property businesses. And I have my own podcast called the Ultimate FD Podcast. We're about to surpass about 25,000 listens, which is great. And the podcast is growing in popularity, which is weird because I didn't think anyone would really be that interested in finance and accounting and bookkeeping and all those things they need to run a profitable business. But people seem to absolutely love it and they love to geek out on it. So if you've not checked that out, feel free to do so. I think Sally's just dropped a link to that in the chat, which is appreciated. I literally work with hundreds of people every single year. So I'm a trainer on the Property Entrepreneur Program, which a lot of you may know, with Daniel Hill. But then I also have my own business where I actually work with clients on more of an FD basis too. I'm an Amazon #1 best-selling author of my book, Small Business, Big Profit. That was launched, I think, around March, April this year. And I achieved financial independence at 33, which basically means, and this is like a definition we have in Property Entrepreneur, and that I live off the steam, which is basically I have a portfolio of assets, properties, which are low risk, low return. So we're not talking about HMOs and SA, we're talking about low risk properties, single lets, HMOs on long leases, commercial property, which provide me more than I need to live every single month. And that's what we call financial independence. And my main focus now is Ultimate FD. And this came about through my own challenges, whereby I was scaling companies, scaling portfolios, and realizing I wasn't actually making any money. And then trying to find a solution which I could put in place to help me understand, you know, what the numbers were, how things were going, how to improve the numbers, and how to create highly profitable and highly lucrative businesses, which I've done successfully now a number of different times. So that's it about me. And what I do try to do is try to give entrepreneurs the tools they need. Like, in reality, everyone sitting here needs to understand financials. You need to understand how to run accounts. You need to understand how to run a P&L. You need to understand how to run a balance sheet, but no one really wants to do it. Like, unfortunately, it's very few and far between. Actually, people are actually genuinely interested in doing that. Everyone wants to go and find the deal, you know, find HMO, run a service accommodation business, whatever. No one wants to do this bit, but this is the bit. This is the fundamental that's going to be the difference between doing deals that make you money and doing deals that actually cost you a fortune. And that's what we're going to talk about today. So a little bit about you. Got this off Guillaume's Facebook the other day. It's very, very good. You're a very, very good looking bunch. You are all heavily invested in Property Filter, and I believe Property Filter 3.0 has just come out and it's landed by storm. And I'm going to share with you what I think are some of the challenges you're facing at the moment on your journey. But before I do that, I want to get a bit of engagement and find out from you. And I want to know what your problem is. So what's your problem? And what I mean by that is not just like, you know, you're all using or considering using Property Filter, and your problem might be you're trying to find deals. But if we go deeper than that, what are you actually trying to achieve by investing in property? Is it security? Is it stability? Is it freedom? And if you can just pop that in the chat box for me, I'd appreciate it. Well, there's loads coming in. Thank you for the cash flow, independence, freedom, passive income, pension, replace salary. Amazing. So a lot, like I said, the bulk of those answers, probably 80% of those are all around some sort of level of freedom or income, which is going to provide them with that freedom, which is why I started buying properties too. It's like it's the answer for most people. And in fact, before I move on, So I said there were some prizes along. Well, I said we'd encourage engagement. So what we'll do is for those. Thank you, by the way. There's loads of response in there, which is absolutely spot on. For those first 5 people that responded, so it is fastest finger first, I will send to you a free signed copy of my book. So we'll send that in the post. So all you need to do is those first people that engage, you get a free signed copy of my book, and we'll send them out to you in the post. All you need to do is just send your address to Sally. Sally's in the in there. You can direct message to her. She's in the chat box with you guys as a participant. So if you send a message to Sally Burks, she's online. You can get a free signed copy of my book. So well done. Keep the engagement coming in. There's going to be a few more opportunities throughout the webinar. So I think the reality is your problem is, and most people, it is some sort of like level. They want freedom, they want income, they want to retire. But in reality, like, don't think that just buying properties is going to allow you to do that. Really, if you want to do that, you're going to need to manage those assets really effectively, really well, and be really keen on your financials. Another one of your problems, I think, and the reason you're on this webinar, the reason you're using Property Filter is you're hungry. And that's a good thing. You're hungry for the next deal. You're always hungry to grow. You're always hungry to buy more deals. You're probably parts of groups or masterminds where everyone's buying property. And like you always feel like you're behind. You always feel like you need another deal. You always feel like everyone else is getting deals and you're not. And you want more deals, more deals, more deals. And you can't wait to get your next deal. But have you ever been in a position where you're really hungry, you're not eating all day, and you're on some nice diet, and you've just been eating really clean for a long time, and then all of a sudden you're gorging in chips, burgers, and crap food? And that is like a real risk, is that you're hungry, you want these deals, you want these properties, but you'll just get to a point where you get so hungry, you just accept a deal that you wouldn't normally do. You wouldn't normally do on a good day. And it's like having a diet. Like, you get so hungry that you just eat a load of rubbish that you would never normally eat. Whereas if you didn't do the diet in the first place, you would never have eaten that rubbish. And this is what we want to avoid. It's like most investors are so hungry for deals, they just do any deal that lands upon their desk. And in reality, and trust me, I've seen behind the scenes, most investors are doing deals that aren't actually making any money. Those deals you hear about on podcasts, those deals you see on stage, when you're actually getting the nuts and bolts in it, or there's an interest rate rise, or there's a maintenance issue that wasn't talked about, these deals aren't actually making too much money. And there's only like 2 or 3% of people that are actually doing deals that make great money. The next problem you have is your emotion, your egos. And in reality, it's like we get emotional about this. Like, we get so caught up in all these deals we want to do, all these properties we want to buy. We think bigger is always better. An 8-bedroom HMO is better than a 6-bedroom HMO. Single-lets aren't as good as service accommodation or whatever. And we get so caught up in our egos, like wanting to do bigger and better deals. And our emotion, we get emotional about deals. And you're emotional, you are emotional if you're in a place where you ever feel like absolutely like crippled or gutted by, when you have that deal that you've been doing and you've been trying to buy for like 3 months, you have to walk away. And you're like, there's that painstaking feeling in your stomach and in your heart, like, oh, you're so gutted. It's like, that's emotional attachment. In reality, like, the best investors aren't emotionally attached at all. So this emotion and this ego will lead you to do deals that don't necessarily work. So I think that's your problem. It's like, you want to get to freedom, but in reality, you're so hungry and so desperate to do deals that you're going to let things get in the way. You might do deals that aren't actually necessarily going to get you towards that end goal. The objective is a highly profitable portfolio. That's what we're looking to achieve. Like, someone put in the chat box, like, who doesn't want a highly profitable property portfolio? You're not going to win a prize for that. You could try it. Maybe it's a boob trap. But no, like, there's something going on in the chat box. Yeah, great. Everyone wants one. I want. Yes, please. Great. You passed the test, because no one wants a low performing property portfolio. So everyone should be aiming for this. But in reality, most investors aren't getting this. They're buying loads of deals. They're saying, oh, I've got 10 properties. Great. They're actually losing money, or they're not making much money at all, or they're actually disappointed by the outcome. So what's the steps to get you there? So there's 3 steps to get you to a highly profitable portfolio. Well, they're as follows. The first is you find good deals. Now, you are already doing that step by being on this webinar, by working with Keegan, by using Property Filter. You're already aware of this. You're trying to find good deals. That's what you're doing. That's why you're here. Great. But that's only step 1. And unfortunately, step 1 is only the first step, and it's not going to get you to where you want to get to. So step 2 is you then need to make great money. So we actually need to make sure we're making great money off these deals. Otherwise, it's a waste of time, waste of energy and effort. And it's not just the deal that makes money, it's how you manage that deal which makes money. And the third is build substantial wealth. Excuse me. So there's 3 steps. And as I said, like you're all using Property Filter. This is a tool designed to help you find good deals, maybe great deals, whatever it is, however Guillaume wants to market it. Like you're finding good deals, you're finding great deals, but it's these next 2 steps that you need to make sure you are considering before you move on. Because so many entrepreneurs, so many investors, they go out and find these deals, but in reality, they're not considering how they're going to make great money off these deals, not just now and in the future, and how they're going to use these deals to build substantial wealth, which is where it comes down to the numbers, it comes down to the finances. And this is the bit you need to understand. Key sentiment: if you cannot measure it, you cannot improve it. So if you cannot measure your monthly performance of every single one of your properties, you're never going to be able to improve it. If you cannot track a refurb, you're never going to be able to be in budget. Like you need to be able to measure all of this stuff, measure all your financials, all of the returns every single month without fail. But if you can't, you can never improve it and you can never control it. And it's this which is going to have the big impact for you. This is going to put you ahead of the curve, because I speak to way too many property investors that have gone out, they bought themselves 5, 6 deals, maybe 15, and they're just in a huge pickle and they can't see the wood from the trees. They don't understand why the portfolio is hemorrhaging money and they have no idea which properties perform, which properties not perform. And you need to be in a place where you can measure and you can improve every single property every single month. And that's going to set you apart. We talk about becoming financially independent and me becoming financially independent at 33. I did this through my property portfolio, but I actually got to a place where I had about 16 properties at one point, and I actually became I became a millionaire and got to a 7-figure net wealth, not by buying more properties, but actually selling 6 of those properties and keeping 10. So it wasn't me actually buying properties that made me wealthy. It was actually me restructuring my portfolio. And that was when I really, really made a difference in my portfolio. I had all of these different properties and I thought it was all about buying more, buying more, buying more, buying more. But eventually I got to a point where I really looked at it. I looked at all of the numbers, really zoomed out, and I restructured the whole thing. And that's where I actually achieved financial independence. That's where I got wealthy. And the key sentiment here is make sure you're not going to buy loads of deals that don't do money, and make sure if you do buy a deal, you're monitoring it from day one. How well is that deal actually performing? How much money is that actually making me? Is this an asset I should keep? And these are the questions you need to start answering. So how to do deals that actually make you money forever? Well, I'm going to take you through the methodology now, so you can understand like the basic tools you need to put into place. Before I do that, it'd be good to get a bit of engagement and for me to understand, like, where are people on their property journeys within this room? I've kind of assumed people are kind of starting or they're a few deals in, but rather than if you just did like a scale of 1 to 10, 1 being right, I'm literally not just starting out, like Jill's just put in there, just starting out versus I've been doing this for 20 years, bought a sizable portfolio. Whereabouts are you? So 2, 4, 2. Jonathan Knowles has been doing this a long time. Starting. Yeah, it's a bit of a range, but most people are kind of at the start, kind of mid-level of their journey. Nice. What you need is WCFF, which stands for World Class Finance Function. And it's not actually too hard to have this. It doesn't have to be expensive. I'm going to take you through the basics you need to scale a highly profitable portfolio, manage your money, make sure your deals are profitable from day one, and actually generate you more returns over a period of time. So the first thing you're going to need is systems and software. The second thing you're going to need is people to run those systems and software, and we call this the 4 professionals. Third thing you're going to need is what we call the 3 pillars. So this is basically the actual reports you're going to need on a daily, weekly, and monthly basis. Then you need a bulletproof business model, which is basically how your business fundamentally makes money. You need a forecast, which is going to be the 12-month projection of where your business is going, where your portfolio is going. And then probably one of the most important things you need is what we call Master Cash Manager, which is going to basically help you manage your cash flow. Now, this is the full kind of methodology that we teach and we implement for people. However, in this webinar, we're going to go through these top 3 because this is just the basics. And I would say like all of you need this. I'd say, in fact, I'd say all of you need all 6, but as an absolute basic, getting clarity and understanding where you are now is going to be the absolute essential for you. So I'm going to take you through all of these in depth and in detail. So we're going to start with systems and software. Now, the first port of call is just making sure from day one you have accountancy software. So a level of accountancy software that's actually going to help you manage your portfolio. Now, we would always recommend Xero. some of you probably already have this. I wouldn't start a limited company without zero. Like I see it almost like once you got the company's house name, like when do you actually have a company? Well, when you've got zero in place. This will cost you anywhere from, I don't know, 18 to 26 pounds a month. I think in some cases at the start it might be free under a certain level of transactions, but I always budget about 26 pounds a month for zero. And this is basically going to be one of the easiest ways and easiest things you can put in place just to start helping you manage your money from day one. This is all about financial clarity. One of the things I'd say within zero, and one of the first things you need to get and start looking at is a profit and loss. So P&L, profit and loss. Hope there's more profit than there is loss. And one of the things zero can do, one of the things I'd recommend is once you get zero set up, make sure you have the ability to run a P&L by property. So once again, I speak to too many people that have got sizable property portfolios who have got zero, and they go, yeah, I've got zero, but I don't see much value in the profit and loss, because they go, well, I'm looking at 10 properties and it doesn't really tell me much. I'm like, well, yeah, it won't. What you need to do is you need to have a P&L by property. And you do this using what we call tracking categories. So this is like an actual screenshot from my zero for one of my properties. And you can see here, this is literally one property. And this tells the story of that property over about 12-month period. I ran it from January 2024, which is quite interesting. And what you want to do is every month you want to be reviewing this and letting zero tell you how your property is actually performing. Can you see my mouse on the screen? Is that, yeah. So basically, like you can see this from April 2023 to January 2024. And you see this property, like it's been a really interesting journey. So this is where the property was a professional let. So it was professional let probably for like 3 years, maybe less, maybe like 2 years. And you see like I've got the kind of the slightly more volatile professional income coming in. Then I decided that I was going to flip it over to a charitable lease. So flip it onto like an ongoing charitable lease. So you can see that over here, you see like the June to September is like the transition period where tenants move out. I do maintenance, that work I've got to do to basically do some compliance work, etc. Like all this stuff down here. Then eventually it stabilizes and we get back to November, and you can see that I've got the accurate the monthly lease in there. Just actually agreed a £600 increase on this, which is good. But also what this does, it tells me like, right, well, these are the numbers before the charitable lease, these are the numbers after the charitable lease, and was it actually worth the return on investment, and how can I see it? But also every single month, I'm looking at every single line in these P&Ls. I'm actually going like, where can I cut? Why is my light, power, and heating too much? Like, what's going on? And you want to be scrutinizing your P&L every single month to look at what's actually going to have it laid out and basically challenge every single line to make sure it's all being managed. And what I do for every property, I have one of these. I look at it every single month, and you can basically see exactly what's going on. And that's the power of zero. It's very, very powerful. And this is a screenshot from zero. If I clicked into any of these lines, it would tell me what's happening. So the first step is always zero. Other people say can use QuickBooks, can use Free Agent. You can use whatever you want. I wouldn't recommend it. I would always recommend zero. I've used, I don't know, I'm going to say like in my professional career about 40 different systems, and zero about that is the best, and it costs absolutely nothing. But I'd say like doing this first would be a first port of call. We'll share a referral code, which gets you 50% off for the first 3 months. I think we get paid something. I don't know what it is. It's not sizable. But it's 50% off for the first 3 months if you want to sign up and use zero. I'd say as a first port of call, make sure you've got that. So that's the first step, zero. And the second step is then people. So I'm a big advocate of delegation. I'm a big advocate of do nothing, delegate everything, and trying to have people in your business to actually run this for you. And a big key sentiment of accounts, which I think I must say about 50 times a week, is don't do this yourself. It is above and beneath you. So what I mean by this is there's a real risk you download zero, taking my advice, you speed of implementation, you get it implemented, or you get it up and running, and you start doing it, and you start basically going, well, this is quite easy. I'm doing this myself. You start watching a few YouTube and whatever, and you're like, oh, this is quite straightforward. But in reality, you should never do zero yourself. And why? Well, number one, it's beneath you. You're out there trying to find deals. Hopefully these deals are going to net you thousands of pounds a month, every single month. And these are multi-million-pound deals or whatever they're going to be, hundreds of thousands of pounds deals. So it's beneath you. Like your hourly rate is much, much higher than the amount you could pay someone in the Philippines or a bookkeeper to actually manage your zero for you. But in addition to that, it's also above you. Because unless you are a qualified accountant and you understand prepayments, accruals, capitalization, depreciation, interest accruals, and all those different elements, you're actually going to do it badly. So not only are you going to do a job that's well beneath your pay grade from paying somebody else's perspective, but you're also going to do it badly because if you don't know how to create a balance sheet, your accounts are always going to be wrong. So I'd say you want to always delegate this and outsource this as soon as physically possible. And remember, business is a team sport. Like, you want to get people in to actually run this for you. Now, I'm going to share with you the system we use called the Four Professionals. This system cost me £60,000 to find. I literally spent money on virtual assistants from the Philippines. I recruited people in-house. I tried to get my tax accountants to do it, recruited overpriced FDs. And it took me about an 18-month process to actually get to this position or this system, which I'm going to share with you now in this webinar for free. And this could be an absolute game changer for the majority of people in this room, and something you can get set up sooner rather than later. And this is called the Four Professionals. So these are the people that run these systems for you. So the first is you need a finance assistant. So your finance assistant is basically responsible for what we call financial operations, so operational finance. And this is basically the person that does anything that's kind of client related, tenant related, like externally facing. So financial operations. This is where you might get that virtual assistant from the Philippines. You might have a VA, a PA, someone that's going to do this for you. They'll typically be part-time or pay per hour. You know, in the Philippines, you're looking at $3 to $6 an hour. In the UK, maybe 15 to 20 pounds an hour. They're going to make payments for you in the bank. They're going to pay your suppliers. They're going to chase your tenants for rent. For those of you that have agencies and work with landlords, you'll do what's called your landlord remittances. Do any supplier invoices, send any client invoices for you. That's your finance assistant. And that's like the level, the base level of the pyramid. The next level after this is what we call a bookkeeper. So a bookkeeper is responsible for what we call recs and checks. So recs and checks, reconciliations and checking the accounts. So reconciliation would be basically if you, if I've got Russell on my screen for some reason, Russell, so I'm going to pick on you. If Russell was went to Costa yesterday and he spent £3.50 on like some sort of frappuccino, I don't know if you get them at Costa, and he wanted to put that through the business, he would have a receipt. And basically in the accounts the next day, it would say, right, £3.50 in Costa, right, here's the receipt. I'm going to put that to accommodation and food. So they start to categorize things in the P&L in the appropriate category. And they also just check things are actually accurate. A bookkeeper, you want to have a level of experience. And it could be that they are experienced by, qualified by experience, sorry. So you want to have a level of qualification. So it could be they're qualified by experience. They've been doing it for 10, 12 years, or it could be they're actually a qualified bookkeeper, which is AAT, some sort of accounting qualification. Anywhere from 15 to 25 pounds an hour. And they're doing stuff that's beyond your finance assistant. So reconciling your bank account, checking your balance sheet account. So like when you buy property, that should go onto your balance sheet, you know, and that's quite a sophisticated thing to do because you have a completion statement. It needs to go to the asset category, the liability category, as well as costs as well. They're doing journals, accruals, prepayments. When you become VAT registered, if you become VAT registered, maybe some of you do an SA, they'll do all that for you. And they'll basically make sure things go in the right place. And they'll also do checks. So if those of you that take tenancy deposits, they'll be checking that your balance sheet matches what's in your DPS account, for example, which you should always do. So that's your bookkeeper. The next level above that is what's called a finance manager. So they oversee your bookkeeper and make sure the bookkeeper is doing the role that they need to actually do in practice. And a finance manager is responsible for something called reporting. And basically your finance manager turns data to information. So they basically turn what's been put in your accounts from, right, here's a profit and loss for Beach Avenue, this property. Here's what it means. Okay, your rent was up, your utilities went up, your profit was down, here's why. So they give you the information you need. And this really is the missing link for most entrepreneurs because most entrepreneurs aren't particularly like financially, I wouldn't say they're not financially literate, but when you send them a balance sheet and a P&L, they don't, you know, it's not their language. So this is the person that puts it in their language so they can understand what it is they need to understand so they can make better decisions. Finance manager costs anywhere from £30 to £65 an hour, depending on the kind of person you get. Generally a chartered accountant, provide commentary. They're the kind of person you can reach out and say, what happens if my interest rate goes up by 1% across the portfolio, whatever, they can tell you the answer. They can help you with cash issues, you know, give me a cash flow forecast of the business, liaise with your tax accountant for you, etc. So that highly valued member of your team. And then the final is your tax accountant. So this is something that sits above all of this. And most of us have a tax accountant. The big mistake most of us make is trying to get our tax accountants to do some of the other roles within this pyramid. and tax accountants I'm still not found a tax accountant that's built to do this. Really, your tax accountant should be doing one thing, and that's giving you tax advice. Well, two things. They should be submitting your annual tax returns for you to make sure you're on time, and they should give you tax advice about how to mitigate or minimize your tax bill where possible. And what you'll find is the quality of your advice dramatically increases when you have the other professionals underneath, because then they're getting accurate management accounts to actually review and to actually look at. A few mistakes people make. So firstly, overpaid versus underpaid. So one of the things that people do is they go and get a bookkeeper, and they say, right, I've got this bookkeeper, I'm paying them £15 an hour. And, you know, I've asked them to do my my P&L, my balance sheet. I've asked them to give me commentary, and they just can't seem to do it. And it's like, well, it's because you're paying someone that's not qualified to do it, to do a job they're not qualified to do. You know, it's above their skill set. So that's why it's not working. And if you've got people in the Philippines trying to do your accounts for you, and you find they're just not giving you that output, it's because you're trying to underpay someone to do a job that's at a much more qualified level. You wouldn't go and get a general handyman in and say, right, can you plaster a wall for me? And then when they do a bad job, just go, well, you know, okay, you're a lot cheaper, but you've done a bad job. You'd go, well, no, I should have got a plasterer to do that. So just make sure you get the right people at the right level. Or what can happen as well is you overpay. And I think this is what happens when people use their tax accountants to do this, because they go to the tax accountant and say, look, Josh said I need bookkeeping. Can you do it for me? Tax accountant goes, yeah, I can. It's £40 an hour. It's normally quite a high price. And they give you a chartered accountant to do it. And they might give you like a finance manager to do your bookkeeping. And, you know, we're all property entrepreneurs. You know, we're all scaling companies. We've all got stuff going on and scaling portfolios. And what happens when we get given loads of low value work to do? Well, we just don't do anything particularly well. So this is the same with a finance manager. If you're going to pay someone £50 an hour and you give them loads of low value work, like reconciling Russell's, you know, Costa receipt, they're just going to get busy and not do anything particularly well. So you need to make sure you're paying the right person the right price. The next is urgent versus important. Next question I get is, can these roles be the same person? In some cases, yes, but I wouldn't recommend it. I think the main split you need is where we have that finance assistant up to bookkeeper. These two, it's really important they get split. And these are the two that people try to merge together quite a lot, actually. The reason for that is urgent versus important. Like, if you've ever not paid a trade on a Friday, you know, they're going to brick your house. You know, they're going to do all sorts of like damaging stuff to you wherever they can. And you want to make sure you're in a place where that's not, you know, going into somebody else's. That's not going to throw management accounts off, because in reality, if you're having all this noise or tenants aren't paying their rent, or, you know, whatever's happening, you want to make sure whatever's happening with the finance system, it's not going to ripple into you're not having management accounts. You're not having the reporting you need on your properties, because urgent versus important. And finally, internal versus external. I would keep the finance assistant internal. And when I say internal, I don't mean you can't, you know, outsource to the Philippines, wherever, but you want them as part of your team. And all of these three I would keep as external providers, ideally, so they're not getting kind of, you know, eaten up by the day-to-day running of the business. And then finally, pay per hour. Like, I appreciate some of you just starting out, and you might go, well, that's really expensive. I can't afford 4 people. Well, it's not, because all of these people are paid per hour. Like, finance assistant, you're probably looking at $3 to $6 an hour. I'm sure, you know, when you work a property filter, you might have them involved in some of that work with property filter. You can just ask them to do a bit of, you know, detail oriented work with you already. Bookkeeper, finance manager, once again, these are per hour. So your bookkeeper might be 5 hours a month for you at this point, and then your finance manager might be half an hour a month. And your tax accountant, most of you are going to have tax accountants anyway. For some reason, people love getting tax accountants because they think it's going to save tax, whereas actually tax doesn't become a problem until 5-6 years in. So you really should start with this framework and build yourself up. The whole point is, as you work up the triangle, people get more expensive, but you're using them less. So it creates this really nice balanced ecosystem where actually it's a really cost-effective solution. And really, you know, even if you're just starting out, you might be looking at £150, £250 a month to have accurate management accounts, accurate P&Ls, accurate balance sheets. And honestly, that will save you a fortune, not only in terms of profit, but also in terms of tax over the years, because you can actually get good tax advice as well. And as I said, I would never start a company about these people. So the question is, which of these do you need? Post in the chat box. Which of these do you think you're lacking within your business at the moment? All of them, Hardy. That's honest. I appreciate that. All. Everybody is all 2 and 4. Okay, cool. So Chris, you're lacking the bookkeeper and the tax accountant. Is that correct? assistant and finance manager.
Hello. Hi. Sorry.
Hey, Chris.
Yeah, lacking the finance manager and finance assistant.
Okay, cool, perfect. So you got a bookkeeper. Are you,
Yeah, yeah,
are you
she comes
having
part of the package with the tax accountant
cool?
company. Yeah.
And are you finding like are you getting the information you need from like a reporting perspective, or is it quite data driven?
No, I wouldn't say so. What I get is, their involvement is to do my self-assessment return and my company accounts return every year because I've got two properties in my limited company name and two in my personal name. But then I've said to them, I want to know more about it. I want to know, I need to actually know what profit and loss I've got per property because I tried to do it myself. I'm not an accountant using spreadsheets, and it's just got to the point where I'm years behind on it and I've not got clarity. And yeah, they said they can help me with that. So once we finish this year's accounts, the plan is to look into all of it. But, it's kind of stressful when you think to yourself, oh God, like I actually don't know with certainty how each of these four properties are performing. I've
Yeah,
got a rough idea, I've got a hunch, but that's not really good enough, is it? So
absolutely. And so it sounds like you like so that's the point. You've kind of got box ticking. It's like right, things are being produced, and then your tax accountant's submitting them. But that information you need is that finance manager, which is that person say, right, here's your P&L, Chris. Here's each property. Here's what's going on. Here are some key trends, and that's yeah, you're lacking that expertise in the business. That'll be a game changer for you.
yeah,
That's one.
exactly.
Got a
Yeah.
few people that are missing the assist. Thank you, Chris. The few people missing the assistant and finance manager, bookkeeper, and up first two. Yeah, so I recommend like I appreciate. And by the way, if I was sitting in your shoes, particularly for those of you that are just starting, and I was back 10 years ago when I first got started, and on myself was telling me this, I probably would ignore it. I'd go, yeah, I'll just get it later when I actually need it. Like honestly, like, and I would do the exact same as what you're thinking right now. Genuinely, like I'd probably go, yeah, yeah, he says that, but it's a bit of a cost, and really, I've not even found my first deal yet. But like now, like 100%, this is going to cost you barely anything, and it's going to be what you need to scale. It's not a cost to slow you down; it's a cost to scale because you're actually going to understand your numbers. And I'd much rather you do 3 deals that change your life rather than trying to do 10 which are unprofitable. And genuinely, that's the difference between that's know your numbers. That's what this whole thing is about, and how it can really empower you and get you to where you need to be. All right, we'll keep motoring on. Thank you for all the participation. Oh yeah, I did also. Yeah, there's a second prize round on that one as well. So, by the way, if anyone wants to listen to this podcast, episode 12, it's just in more depth and detail of the Ultimate FD podcast. I'm sure Sally could potentially dig that out and put it in there, though. I'm not told her before, so sorry, Sally. If you don't mind finding it, I'd appreciate it. So, episode 12, meet the professionals, and then yeah, another prize. So, same prize again. So copy of my book signed. But if you already won a prize and you're like top performer, like A-star student, and on the first one you won the prize, I'm going to give you a copy of this, which is an amazing book called The Last Lecture. It's my favorite book, apart from myself, my own, of course. But it's basically by a guy called Randy Porsche. There's this concept in America where lecturers give their last lecture as if it was their last lecture, like what they would actually talk about in their life. And then he's been invited to do it, but he's actually found that he's got loads of tumors in his body, and it's actually going to be his last lecture before he dies. And it's basically this book is a story of him, creating and giving that last lecture. It's amazing. So if any of you have already won a copy of my book, then we'll give you one of these as well. So thank you for the participation. Cool. So the aim of the game here is right person, right job, and right price. And this applies to your accounts, which is getting the right person to do the right job at the right price. Honestly, guys, as well, this applies to everything in business. And like over the last few months, just done in my podcast, I've saved about at least £2,000 a month just by reshifting roles around, getting the right person at the right price to do every job. So this is not just accounting. This is for everything that you ever do as you start to scale these businesses, and these portfolios. So first was systems and software. So we've got our Xero set up. We've got people running the systems and software. And then what do we actually need to see? And this is maybe the bit that some of you are lacking. And this is the actual output. And what I'd say is like, you want to get in the habit now of every single month, you review what's called the 3 pillars. So like a store needs 3 legs, a business needs 3 reports. And these are the 3 things that are going to guide you in terms of all your financial performance. This will take you about 60 minutes a month. And this will be the most lucrative hour of your month every single month if you let it be. Like I've literally had clients that didn't do this, and they did it for the first time. And they found £5,000-6,000 of costs they didn't know they'd been spending that they needed to cancel. Like tenants swindling like electricity meters when they're meant to be paying for themselves, and it's been passed on to them because they've never had a formal review. They've never noticed all this stuff. So don't wait until you're in that boat where you're trying to get £5,000-6,000 back from a tenant that swindled you out of electricity. Do it now and have a lean business, a lean, like cost-effective, profitable business from day one. So get it set up. There are 3 things you need to look at every single month. So the first we talked about, this is your P&L. And this is like an example of one of my P&Ls, one of my properties. So you're going to have multiple P&Ls. I'd always recommend, like we just talked about, is having multiple P&L by property and a top level P&L. So you can see actually how things are running and how things are going. And this is like the first document that people often ask for, because it's like, we all just want to know how much money we're making. So it's where a lot of entrepreneurs, a lot of investors start, but they tend to stop, which is another mistake. Like, you need more information than this. If you already got P&Ls in place and you already have this, which is great, like 10 out of 10, top marks, then what we need to do then is take it to another level. And this is more advanced. So don't run before you can walk. Like, get your P&Ls first if you've not got them. The next is what I have, which is called budget to actual P&L. So rather than just look at what's happened, which is more of an exercise to kind of spot the difference between last month and this month, I look at what did I say the budget was going to be for this property and how have we actually performed. So you can see here, this is an example. Column left is my actual. On the right is my one that says July 2024 church view is my budget. You can see I budgeted £1,772 and I actually achieved £2,163 on that property, which is £391 variance. Why? Well, it's because I didn't spend any money maintenance and I've just budgeted for about £295 a month of maintenance. So that's my budget to actual. It actually gives me an accurate report. And then something else I picked up on there is, and this is something that from my actual pack that I reviewed last month, is why is there no insurance payment on there? Because we've got insurance in there as a budget of £80 and there's no cost for insurance. So that was one of the questions I asked, like, why is there no insurance payment? And the team are looking into that at the moment because there should be an insurance payment. And it's like, well, are we uninsured? What the hell's happened? I actually know why. It's because the provider have paid for it and it's just taking time to get through to our accounts. But there's a question I asked and it's like, you want to make sure that you're spotting this stuff. I noticed on one of my properties, like 3 months later, we hadn't been paying council tax. So why aren't we paying council tax? And it got picked up. And rather than there being fined and getting hit with a £4,000 bill that we weren't expecting, we picked it up very quickly, we settled it, and we got it all set up in the system again. So it's not just about making sure costs are controlled, but it's also make sure that there's no surprises and that you're paying for everything you should be paying for. The second thing to look at is a balance sheet. Now, I appreciate for a lot of you, this is going to be numbers on a table. And a balance sheet is really important. Like, don't want to, there's no price for this one, unfortunately. In fact, there will be a price for this one. Someone want to share, like, just type in, like, why would you look at a balance sheet? Now, why would anyone look at a balance sheet? Pop it in the chat box. Equity. Hardeep's gone for profit and loss. Not really. You look at profit and loss for balance sheet. I feel like Hardeep, you went for a rush there to get a prize. So I'll give you another chance if you want to. Snapshot, see your cash flow, liability, equity. Yeah, I mean, yeah, exactly. I mean, I think it's based on these answers. Hardeep's gone in to get cash flow. Cool. Based on these answers, I feel like no one's actually 100% sure. Assets versus liabilities. Yeah. So theoretically, understand your asset patterns. Yeah. Well, I mean, what is a balance sheet? And you've kind of all summed it up. Is your assets, which is the things that should bring you future economic benefit, and it's your liabilities, which would result in future economic outflows. So an asset might be a property because one day you could sell it, or it brings you rental income. Or a liability might be something that's a debt. You're going to have to pay it back at some point, or it's a mortgage. You're paying it back every single month. Very simply, that's essentially what it is. So, and it is a snapshot. It's a snapshot of your wealth, because if you have, £1 million of assets and you have 750 grand of liabilities, well, you've got £250 worth of equity, £250,000 worth of equity, which is your wealth, which is cool. So balance sheets are really important from that perspective. But I think for you guys, I'd say, like, that's all kind of nice, theoretical knowledge. This example, one of my balance sheets, I've obviously blocked out a lot of the information, but you've got your properties and your refurbishment at the top up here. You've got any directors' loans into the businesses, any loans, any private loans, any mortgages, etc. And then you've got equity down the bottom. But why would you? I'll tell you the 5 reasons why you like want to look at a balance sheet. So the first is your director loans. So when you guys, most of you guys, I imagine, are going to buy properties in limited companies because it's tax efficient to do so. Not going to get into that now, but it generally it is not always, but generally it is. But director's loan. So when you buy a property, you're going to need to put some cash into that property. So the best way to normally do that is to go, right, well, I've got 100,000. I'm going to put that into that limited company, and I'm going to buy the property in that limited company. By doing that, the company is a different entity to you. So you've now created what's called a director's loan. You've loaned that company as a director a certain amount of money. Okay, why is that good? Well, what it means is when you decide to draw money from that company and take it back out, you're going to take it out as a loan repayment, which is important because you're not going to pay tax on that loan repayment. So that's really good. And you can also do things like on your director's loan, you can also charge interest on that director's loan to the company. So it's a very special account that you need to be made aware of. And there's so many entrepreneurs that miss out on this because they've not logged this or tracked this, so they can't really kind of claim it. But in addition, director's loan also works the other way, whereby you might take money out of the company, you might overextend yourself. And if you have what's called an overdrawn director's loan account, that is bad. HMRC will basically charge you a temporary tax of about 33%, don't quote me on that, 33, 35%, 9 months after year end if that's still existing. And it's incredible the amount of people that get caught out by that and then get sent. We had a client that got sent $100 grand tax bill. Pay it now. Essentially, it was because you've 9 months overdrawn your director's loan account. Now it's a temporary tax, so you can get it back, but you need to manage this account because you can get caught. It can be really positive or it can be really bad, and you need to manage it and have an eye on it. If you don't know what it is, you need to get an eye on it sooner rather than later. The next is investor loans. Like, it's one of the key things I see when we do UFD reviews and I go into like people's accounts. Like, I think it's probably like 1 out of 10 people are doing this properly. And say if you go and take a loan from an investor, which I'm a big advocate, by the way, and say it's £100,000 and you've agreed, right, I'm going to do this deal with it. It's going to go into my company. I'm going to pay it back in 2 years' time. And I'm going to agree a 5% interest rate. Well, that investor loan should be on your balance sheet as an investor loan. And what's even more important is if you're not paying the interest for 2 years, that's fine, but that's going to accrue £5,000 each year. So your actual balance sheet is going down by £5,000 each year because your liabilities are going up. So don't just ignore that and get to the end of the year and go, right, well, I'm going to pay an extra 10 grand back. Every single month, you should be accruing that extra balance you own to them. And so your balance sheet should be an accurate representation of what you owe to your investors. Another way of keeping like track of what you owe to your investors. The next is tax advice. Like, if you want good tax advice, don't just expect to send a P&L. You need to be able to show them all these different loan accounts, your equity, accounts payable, accounts receivable, etc., etc. Drawings. If you want to know how to draw from your business, like there's certain drawing mechanisms you can do if you have like a positive balance sheet. But if you have a negative balance sheet, there's certain drawing mechanisms you cannot do. But once again, if you want to draw from your business most tax efficient, you need an accurate balance sheet. And finally, some of you said this, is cash. If you think about what balance sheet is, it's a snapshot. And every single line on your balance sheet is either going to be a future cash inflow or future cash outflow. And some of them might be like not for a long time. But for example, if you have a property on there and it's say £1 million, well, theoretically, if you sold that property, you bring £1 million into the business. So some of them are what we call fixed liabilities or fixed assets. So although they would bring about that, they're like less likely to do. But anything current is more readily and real. So for example, if you have an investor loan, like that's an outflow that's going to go out. If you have, tax owed to HMRC, that's an outflow that's going to go out. So if you don't have accurate balance sheet, you can't have an accurate cash flow forecast. And we're going to talk about cash in a bit, but as investors, like that's one of the most important things you could possibly have. So you need a balance sheet. And the third, and by the way, I did a whole podcast on this, episode 72, if you want to listen to this. Like, this is me talking about balance sheet for about 1 hour and 20 minutes. And I genuinely thought it'd get no listens. It's one of my most listened to podcasts. So go check it out. Episode 72, people absolutely love it. And then there's a third pillar as well in the 3 pillars, which is your cash flow forecast. So you need a P&L, a balance sheet, and your cash flow forecast every month. These are the 3 fundamentals within that 3 pillars. So once you have that, you've got what we call world-class finance function, which is the top. Systems and software, the 4 professionals to actually run this for you, and then the output, 3 pillars. And I'd say that everybody in this webinar, if you're serious, you're going to think about how you're going to actually get all this stuff in place. So that is basically how we make sure we are buying profitable deals, and then how we make sure we increase the profitability of those deals over a period of time. It's basically how you're going to manage the money in your investments to make sure that you're always is like highly profitable with all of the deals that you're going to do. Hope you've not lost anyone yet. So next we're going to move on to some additional stuff, which is basically got behind the scenes. So I'm fortunate enough to have seen behind the scenes and literally, as I said, like 300-400 property businesses now, which is very fortunate. And I've seen like what people do, which works really well and results in this like highly lucrative business, and what people do that doesn't work anywhere near as well, which results in cash issues, liquidation in some cases. And it's not like people are going out actively trying to liquidate or actively trying to do bad deals. It's how they manage the deals after. I'm going to share with you the top 3 mistakes that experienced investors make so you can hopefully apply this to yourself and avoid these mistakes at all costs. Before we do that, I've got a property filter kind of special offer for you guys. Now, before you all run a mile, this is something that's totally free of charge and totally high value. So bear with me. So this is for property filter only. Every year we do a series of UFT VIP reviews. And basically what this is a one-to-one call with me. And if any of that stuff we talked about before is something that you think applies to you, but you need help on how you're going to want to apply it to your specific business, you can book in a call with me. We're going to have a one-to-one private and confidential chat. I can help you apply this to your business about how you're actually going to implement it. Normally these UFT reviews are 30 minutes. They're £697 plus VAT, and we're unlimited on them. You know, assuming people pay for them, we are unlimited. However, what we're doing for a short period of time is doing 40 minutes. It's free of charge, and there's 8 spaces. And these are going to be for property filter only. We're going to launch them to the open market next month in September. You'll see it on my social media if any of you follow me. If you don't, feel free. But we're going to offer these out to you guys as first refusal. What you get is a one-to-one business review with me, literally one-to-one call. By the way, for paying clients, I charge £500 an hour. So for you guys, this is a great opportunity. You're going to get an NDA signed in advance. So literally, it's private and confidential. You bring any problem, it's not going to go anywhere. I'll review your context in advance. Anything you send over to me prior to the meeting, I will literally review it in advance so that I've actually read it, I've seen it. And, you know, we're not wasting time discussing your setup before we actually dive into the call. It's a high value session. Like it's up to you, whatever you want to get out of it. Afterwards, you'll get UFT report and recommendations where I'll literally advise what it is you need to do and what I'd recommend for you specifically. You get a free signed copy of my book. And then also for those early birds, so for the first 4 that book on, out of this 8, you'll get a 30-minute tax review with a chartered tax accountant. That's not me. It's a separate call, but it's with my partner who's a tax accountant, and they'll give you all the tax advice and all the support you need in that 30-minute review. Normally $697, doing free of charge, and there's 8 spaces. So if you want to make the most of that, Sally will pop the link in the chat box. Book yourself in, and it'll be a pleasure to help you on your journey. And as I said, we're launching this to the market next month, and they'll go pretty fast. So behind the scenes, so the 3 biggest mistakes that experienced investors make. So the first is, actually, before I do that, if anyone wants to pop in the chat box what they think these mistakes are, I'd love to hear what you guys think I'm going to say, to see if we're on the same page. See if you guys are aware of it already. By the way, Sally, for those of you saying yes, please, space, please, Sally's popped the link in, so grab your click on the link and book it. Try and do it themselves. Not profitable deals. Don't look at the numbers. Over leverage. Not using limited company. Yeah. DIY everything. No money. Planning for the future. Yeah, maybe. Yeah. Yeah, I think these are probably all good ones. I'm going to give you some quite specific ones that you guys can consider. Right. I always feel bad now when I do the chat box and I've not got a prize up my sleeve. I hope there'll be another one for you guys shortly. So 3 biggest mistakes. So the first, and like this is something that you can all avoid, but you know, once again, I do find it hard sometimes doing these webinars because I always think about myself 10 years ago, and if I was sitting on this webinar, I'd probably like ignore this. So I'm hoping you listen, but we'll have to see. So the first is they get crippled by cash or destroyed by debt. So crippled by cash or destroyed by debt, or both in a lot of cases. So managing your cash is really important. You've all heard the phrase "cash is king." Hopefully, we have got a prize for this one. So the first question is: do we know who this is? Who's this this person in this picture? OJ, William, that's embarrassing. Biggie Smalls, yes, Paul, yes. So we know he's down with the kids. He's not even down with the kids anymore. He's like a comedian. Oh my God. He's like not even down with the kids anymore. He's like, it's like the equivalent of being in the 80s, even more now. So, and he's got a crown on his head. You got like, so this crown for this image costs $6. Do you know how much it's sold for at auction? This is what the prize is for. How much do you think this crown, which cost him $6, sold at auction for? This is Biggie Smalls, by the way. 500,000, 312, 1.5 million, 60. We'll have to go for the person that was the closest. I'm not sure who that is. Sally will have to work out if that's the case, Sally. So this sold for $600,000, which is crazy. It's not quite the 6 million people were hoping for, but wow, just absolutely mind blowing. Anyway, this is Big E. Like, this is one of his artist covers, and yeah, there's literally no relevance to him. I'm just showing the point that cash is king. So apologies. But I wanted to do a prize. So feel free, those get it. You get a copy of my book or a copy of the last lecture if you've already got a copy of my book. If you've got both of them, I don't know what we'll have to do. We'll have to find something else for you. But property is like the perfect storm for cash issues. You have a very high capital outlay. And some of you, that'll be your own money. Some of you, that'll be investor money. So cash in, cash out, very high capital outlay. You have a relatively low cash flowing investment. And then you have so many volatile cash ins. And what I mean by that is like a refinance. Like if anyone here has had a refinance that's completed on time, like you deserve like some sort of medal. Like I don't think I ever have. If anyone here has had a refurb that doesn't go over budget, like fair play to you. You're doing something like you should be teaching property courses, because that doesn't really happen. So cash is a real issue for property businesses, and it's something you really need to monitor, because you're in the perfect storm of being in a boat where you have high cash in, but then massive cash out, low recurring income, and you need to manage cash really effectively. What's even worse, what a lot of people do is they take on debt with high interest rates as well. So although they may not cause themselves a monthly cash problem, because often people roll up interest to the end. I'm not a fan of doing that, by the way. I like to pay monthly. But roll up cash towards the end, you have these big cash outlays that are going to happen at some point. And if you don't plan cash well, you're going to have real issues. That's where Master Cash Manager comes in. So Master Cash Manager, and what is this? This is basically a 12-month projection of any future ins and outflows of the business. So you're going to take your portfolio. So you might have 3 or 4 properties already. You might be able to predict that monthly cash flow that's coming in. It might be £10,000 a month, £200 a month, whatever that may be. And then what you're going to do is you're going to list down all of the cash inflows and outflows you're going to have. Could be a refinance, could be a new investor, could be the interest repayment on an existing investor, could be a bridging loan, could be a refurb, whatever it may be. It could be corporation tax. You want to list all that down, and you want to manage that meticulously. And every single month, you need to roll this over. And every single month, you need to look at the next 12 months. And all we're trying to do here is prevent problems from becoming emergencies. It's okay to run out of cash. It happens all the time. But don't run out of cash today and realize you've got an issue. Work out you're going to run out of cash in 3 months and think about how you're going to solve that now. So that's cash. Master Cash Manager, we all need this in place. And we talked about it before, but you also need a balance sheet. A balance sheet shouldn't be some mythical beast like a unicorn. It should basically, you should be able to read for every line. It should make total sense. And on your balance sheet, you should have all of your debt on there. And you should be looking at your debt every quarter and going, what's my blended interest rate? How much is this actually costing me? You should be in a place where every single quarter you're looking at this and you're working out, right, how do I better structure this debt? So you need those 2 things. The next biggest mistake that people make, so the first is crippled by cash. The second biggest mistake is they hold for too long. They hold their properties for way too long. A lot of you guys, if you're at the start of your journey, you're in the honeymoon phase where you're just excited to buy deals and you think you're going to buy these forever. Some people, like I used to say it, and other people I've heard say it, like, I will never sell a property. Have you ever said that? And it's like, well, it's just a really stupid thing to say, really, actually. Like, okay, I appreciate the headspace is, well, yes, we want to buy these deals. Yes, we want to retire off them. And yes, we're not in the market for flipping properties. But in reality, I see too many investors that have kind of emotionally attached themselves to a deal. The deal goes really wrong. So it ends up costing more than expected. The refurb goes over, the property gets downvalued. And then they just sit on this underperforming asset forever. And it's like, in reality, they would have been much better off to actually sell the property earlier and earlier. And the most, the mistake investors make is they're sitting there they've got this this property portfolio, and it's just this sunk cost fallacy, where in some cases to actually sell, they're actually going to lose money. But right now they're losing money every single month to hold the property. It's not an asset, it's a liability. So there's this whole sunk cost fallacy where people don't want to sell because they've emotionally invested in it, they put money into it, whereas and realizing that gain is too painful. But in reality, that's what too many experienced investors do. But the investors that do really well just see this as a black and white balance sheet, a black and white returns, interest rates, etc., and they just part ways with the actual property. And as I said to you before, I managed to get my seven-figure net wealth and managed to achieve my financial independence by selling and restructuring my portfolio, not by buying more. And I bought way too many deals. And honestly, like I speak to people now, they say, "What would you do differently?" I would have bought the most boring single let every year, one a year for 10 years if I was going to do it again. Like 10 years in the game, I've ended up with 10 properties. I'd have probably just bought 10 single lets, one a year with cash. That's what I'd have done. It's so unexciting. You're never going to get me on stage. Some of you might turn off this webinar now because I've just said that. It's boring, but that's what I would do if I did it again. But I would have chosen 10 great deals as opposed to buying a loads, having like underperforming issues, like trying to restructure, etc. So take your time and get you in a place where you're going to buy good deals, you're going to manage them well. But if they're not performing, you're on top of that and you're getting rid of them. And finally, the third biggest mistake I see people make is they do developments. Like, honestly, unless you're going to be a professional developer, unless you've got your cash flow totally sorted, I would steer clear from doing developments. You're literally betting the house. And why would I say do development? Why would I say it's a big mistake? Well, let's revert back to mistake number one. Like, if you want to be crippled by cash and destroyed by debt, go do a development, because this is exactly how you do it. You can crippled by cash because all your developments take longer than expected. Your build costs go over by not tens of thousands, hundreds of thousands. You take on really expensive bridging debt and you are absolutely screwed. The market changes and you can't sell the properties. Now, there are, of course, developers that do very well, but they are few and far between. And I've seen behind the books of so many people that you see all over your social media talking about these massive developments they're doing, and it is terrifying. Like, it's a mess, it's dangerous, and it's like a lot of these people are well in over their heads. I think the people that actually do well in developments are builders, like people that estate agents, people that have got like some sort of magic trick. They've got the ability to do refurbs at a quarter of the price because they're doing it themselves and what you guys can do it at. So I'd say, like, really do avoid doing developments because you are going to be back to them more crippled by cash or destroyed by debt. But if you are going to do them, like, honestly, don't even think about doing them without getting all of this stuff in place. Master Cash Manager, future forecast, the business model, how does it actually work, plus all of the financial framework for clarity as you go. So, ladies and gentlemen, I'm going to open up to Q&A in a moment, and I'm happy to be on for another 25 minutes or so, if that's okay with you. If you need to go, that's no problem. Property filter special, as I said, ultimate FD reviews. Like, I'd love to speak to as many of you as I possibly can, but I've got a limited amount of time, so I've got 8 spaces available. I won't go through it again. Basically, this is basically what you get. It's a high value session. Like, no one ever regrets having them. It's an infinite ROI because I'm going to give you advice and frameworks and things to go away and actually use. There's no obligation to work with each other or to do anything after the review. We'll get to know each other, which would be nice. I think you need this. Everybody in this room, I think, needs the stuff I've been sharing with you. So, like, it's gonna work. Invaluable insights, so you get infinite ROI, because I will give you some insights that are going to change the game for you. It's the first step in pulling the trigger and making all this stuff happen. And, like, you've really just got nothing to lose. So, the link is there. Sally will share how many we've got left, or whatever, in the chat box.
I think they've gone in minutes. So.
Oh, okay. Oh, well, that's a shame. We might be able to get some more. Let's see. So then, like, we actually helped with Property Filter back in the day as well, back when they were literally starting. So we helped the company you know and love. We FD for some big companies like Property Entrepreneur. This is some of the feedback we've had from them. Then a lot of faces you'll see of people that are really going the distance within property. They've used or are using our services. So it all starts with a UFD review. We're going to launch into the open market next month, although there may not be many to launch, unfortunately. But let's dive into a Q&A. So let's do it. Has anyone got any questions, or who's got the first question they want to kick things off with based on the content we've shared today? Feel free to raise your hand or put it in the chat box. And then, Guillaume, are you all right for another 20 minutes? Is that okay?
Yeah. We can do until 2:45. Is that okay? Like,
yeah, fine.
10 minutes or so.
Cool. Go for it. Who's got the first question in the...
I think everybody's taking stock in the chat.
Jill's got how do we source an assistant? As in, do you mean like Jill? Do you mean like the finance assistant at the bottom of the pyramid? I'm assuming you do.
I think so, yeah.
Yeah, cool. So I think, yeah, cool. But yes. So in terms of sourcing an assistant, so I'd say there are a few ways to do this. I would, if you're going to go, I'd recommend finance assistants can be generally done from Philippines. I would say. I don't think it's necessarily anything bad there. You need to be careful what you share and how you share it, particularly if you want to do payments, etc. I would say like sourcing assistant. There's a guy called Richard Evans who I know Gideon's got a good relationship with, so you might be able to share his link. They have a company called Vavavoom, which I'm sure a lot of you have used. He can basically source them for you. I've always personally used a company called Online Staff Finder for any assistants I've used from the Philippines. And I quite like them. You pay them about $500, but they basically give you 3 people who they've tested their internet connection, they've done an English test, they've done wealth dynamics for them. And basically you pay them direct as opposed to having that kind of agency model where you're paying the company and then they're paying them. And I like that. I've got teams, I've got systems, I've got structures, I've got management frameworks in place. So I've got the confidence to manage those people without needing like a third party involved. So that's what I do. Have you got any more questions? Cool. Sammy Woo. Okay, so yeah,
Can I?
Yeah, go for it.
Yeah.
Okay. Yeah, go for it.
Ready. It's great story, and so that's very helpful. I remember you said that a virtual assistant or a finance assistant, I think, which is a virtual assistant, cannot do the reconciling in Xero. Why are you saying that? Because that is what I had in mind. You see what I mean?
You can try. I mean, I'm always quite biased because no one ever comes to me and they say, "Oh, Josh, I've had an assistant doing the reconciling in Xero and the accounts are immaculate." They come to me saying this is a mess and it's been annihilated and destroyed. So I'm always quite biased. You might be able to get away with it. I would say there's 2 reasons why I wouldn't put them as the same person. The first reason would be, as we talked, urgent versus important, in that a lot of the stuff we want the assistant to do tends to be urgent based work and things that are like paying contractors, chasing tenants for rents. And what you'll find is when you get really busy, all that work gets very busy and that there can be loads of issues going on. That person gets way caught up in that and they don't do the important work, which is producing the P&Ls, capitalizing assets on the balance sheet. So you find that it conflicts. And like that's everyone's battle. Like all of us is, you guys all sourcing deals. I'm sure you all want to be in property fields all day, every day, because that's the important stuff. But it's never the urgent stuff, is it? So it's always hard to find the time to do it. And it's just the same with accounts. So you could do it, but it generally doesn't work long term. And when you start to scale, there'll be issues there and there'll be friction. Also, the other thing as well is just make sure you've got someone overseeing, because generally what people do is they get an assistant in to do that work, and then Francine, you're going to sit above them, and it's like, well, you're now telling them what to do, but you're not a chartered accountant. So how do you tell somebody that's not a chartered accountant what you should do when you're not a chartered accountant? It's like it just creates a mess that needs unpicking generally.
Okay.
No worries. Sammy Woo, there are many accounting softwares. But it takes 1 hour to work on it by the owner. Will it be good enough not to hire a separate bookkeeper? I'm not sure I understand that question, Sammy. Do you want to unmute yourself? Hey.
Yeah, so my question is, there's a lot of the software, so allow you to input your transaction, so that it's become the bookkeeper. So I don't know why we are asking for the bookkeeper, because I have 4 property and then I'm using the one bank card. So this is only me can understand which a transaction to put under which property.
Yeah, I mean, so are you planning to just stick with 4 properties?
Yeah.
Well, if you're planning to just stick with 4 properties and that's as far as you want to go, then you might be okay. But if you want to go the distance, you want to start doing developments, managing refurbs, and really scale this as a business as opposed to a job for you, then you might find that bringing in the team would be a good idea. I mean, I've got 8 companies like, I don't know how many, 400 or 500 transactions a month, and it's just unsustainable for me to do it. And I've got no desire to do it. Like I'm better off doing stuff like this, selling stuff, marketing. Like that's a good use of my time. But if you're at a place where you've got a very small portfolio, you want to work in it, not on it. You want to just do that yourself, and then fine.
Okay, thank you.
All right. But I'd say all the principles I shared still apply, even if you can do it yourself. I just wouldn't recommend it. I'm starting my letting. Elizabeth, do you want to share? I'm started using my letting agency's accountant.
Hi, yeah, I thought to free myself up, it was quite an intelligent thing to get the woman who sends me the rent remittance and also invoices me or calculates any repairs that are taken out of my rent to actually also input the data into my spreadsheet that I use. I appreciate you're going to laugh at the fact I've got a spreadsheet, but it has got a lot of data in there for 7 years, and it does track individual properties and things. I got somebody in India to enhance it for me. Whether I now move that to 0 is a different thing, but I'm not sure the level of her, so I don't know whether that's a good thing now or whether it's actually an error and I should start again.
I'd say whatever's working. Like, I mean, like moving away from a spreadsheet to 0 would be a wise choice, because spreadsheets are open to manual errors. They can be manipulated, they can go wrong, and the whole thing would just be very efficient to move away from a spreadsheet. That's why I'd recommend 0 plus. It's going to give you the balance sheet reporting, and there's just a lot more functionality. Plus, it's got an automated way of credit control, automated way of sending invoices. So there's all the functionality before you even get to the reporting. But I guess that's not the question you're asking anyway. I mean, my only concern for me to get my letting agency to input information into your spreadsheet is I'd want my team to be kind of probing into that information and not be too reliant on them, because I'd want separation, because I want my accounts team to be challenging my letting agency on maintenance, on cost of stuff, as opposed to letting them have too much control. I said that would be my real concern with that, as opposed to it being an issue for them to actually input it. It's just that challenge is important.
Yeah, I did wonder about that, because I've tended to do the challenge, but I just thought there was going to be a time save in there because she's across it anyway, and she's kind of outsourced by the lettings agency as well.
As long as I guess that it's like what we're trying to achieve. We want accurate management accounts. We want it done in a real-time basis. You want to be able to see the performance by property, and we want to have the ability to challenge the agency and not let them get away with murder, rather than thinking that they can just basically. It's like the equivalent of getting the team members to say, right, here's my invoice, and then they get to pay themselves. So that's what we're trying to avoid. So as long as there's you're comfortable there's a mechanism in place, I think that's okay.
Okay, thank you.
Nice. Any final questions before we finish off? We all good? Nice, but it's been a pleasure. I think Sally's just mentioned that she's managed to free up 2 more slots in my diary. So if anyone did want a UFD review and they're not managed to book on, feel free to grab one of those. And literally we are then fully out. It's been an absolute pleasure. If you want to follow me on social media, it's Josh Keegan on Facebook, or the_ultimate_FD on Instagram. And then, of course, feel free to listen to the podcast. It'd be good to hear from you. And thank you all so much for your time. Thank you again for letting me be on.
Yeah, thanks a lot, Josh. Just really appreciate you coming on, as always. Really valuable, and really appreciate you again, offering your time for our members. I know it's super valuable, so really appreciate that. And
nice.
So,
thank you so much, team. Thank you, everybody.
Really thank you for joining, and I'm going to wrap up in a sec. So okay, so thanks a lot. So thank you very much, Josh, for joining today. Thank you everyone for joining as well. Thank you for your time. Thank you for the engagement. Really appreciate it actually sitting with you here. Do take on Josh's offer if you've not done already, and it's probably sold out now, but do follow for maybe there'll be more releases. So do follow Josh on social media for maybe more later. I really appreciate you joining us today. In the meantime, until next week, visit propertyfilter.co.uk, log on to your propertyfilter account, have an endless supply of deals, join the top 1%, become a high achiever deal finder, do more deals in less time. I hope you enjoyed today's deal finder like I did, and I look forward to seeing you next week. Thank you so much.
Thank you.
Thank you all. Bye-bye.